Shweta madam, good afternoon. Is my voice audible, madam? Hello? Is my voice audible? Ashika?
Good afternoon, sir.
Good afternoon, madam. Is my voice audible, madam?
Sir, am I audible to you?
You are audible. I'm just wanting to check. Am I audible to you?
Yes, sir. You are completely audible.
Very good. How are you, madam?
Okay, sir. You can please check if you can share your screen also.
I'll do that.
Let me give you, sir, let me make you the co-host.
Make Ashika also co-host.
Yes, sir.
Rajesh sir would be joining little late, but he would be joining.
No problem, sir. Okay, sir. Sure.
Madam,
Okay.
you have made Mr. Devraj as co-host. Can you make Ashika as co-host, please?
Yes, sir. I have made Ashika ma'am also co-host.
I can see Mr. Devraj as co-host and not Ashika.
Haribabu on the already. Hey, me,
Good afternoon.
Okay, sir. I have made Ashika ma'am. It was, I think, by mistake, the participants were joining. That's why.
Chalpati sir, good afternoon.
Good afternoon. I am only visiting, but the subjects may not interest me today's car. But
No problem.
I may join future series.
Sure, sir, definitely.
But you are so energetic, like Gajini. You have been making so many fights against GST.
Yes, we should.
All the best. Right.
Thank you. Thank you.
Thanks.
So I think we should start the session now.
Yes, madam.
Okay, sir. Hello everyone. I hope I'm audible to all.
Yes.
Okay, sir. So good evening, everyone. This is Shweta Kaushik, the digital marketing expert at Reda Consultants LLP. And let me take a privilege to welcome you all for today's session for the November month on GST series for real estate. We are pleased to welcome Mr. Venu Gopal, one of the top chartered accountant in practice since 2002 and a founder partner in MS Venu and Vinay. His academic credentials include securing All India 45th rank in CA final. He is also certified information system auditor. He has also completed various other certificate courses from ICAI, namely DISA, course on business valuation, course on the internal audit, course on fraud detection and forensic accounting. He has also completed a one-year course from IIM on data analysis and business intelligence. Mr. Venu Gopal is an active speaker at ICAI on GST, especially on technology and its implementation challenges. He has authored various industry-specific handbooks on GST. He has contributed to the technical guide on GST audit released by ICAI, other publication materials. He conducts workshops on filing returns with ease use of automation. He has developed a lot of Excel-based free utilities on GST like JSON Reader, creating JSON files, GSTI invalidator, composition versus regular benefit analysis, GST impact reader, real estate project switch decision analysis, GST audit, working paper tool, etc. He is the GST faculty for ICAI and conducted various workshops and webinars. He plays an active role in drafting and designing of e-invoice along with GSTN and NIC. And now let's welcome and introduce our another speaker for the day, Mr. Rajesh TR. I think he's joining soon, but let me give his introduction. Mr. Rajesh is presently practicing a chartered accountant in the area of indirect taxes in Bangalore since 2002 with the academic qualification of BCom, LLB, FCA, and DISA. Mr. Rajesh has written many articles on central excise, service tax, VAT, and GST for various professional journals and presented a number of papers in various seminars and workshops. Mr. Rajesh has authored a number of books on goods and services tax, central excise, service tax, VAT as author, joint author, as well as assisting author. He has contributed substantially for compilation and revision of study material on indirect taxes published by ICAI for CA final students. He also has contributed for background material on GST and UAE VAT published by ICAI. He has been a faculty for different programs conducted by ICAI addressing members. He also invited as a guest faculty at colleges and to address the students. And now let's welcome our third speaker, Ms. Ashika, who is also a chartered accountant. She became an associate member of the Institute of Chartered Accountants of India, like ICAI, in 2014. Post-qualification, she worked as an indirect tax consultant in MS, GSAP and company for 7 years. Presently, Ms. Ashika is working as a senior manager ITT at MS Venu and Vinay. She is engaged in providing consultancy and litigation services with a core expertise in indirect taxes and has been serving entrepreneurs and various corporates in various areas like compliance, consulting, structuring, and litigation. Having industry experience, including that of infrastructure, real estate, construction, hospitality, broadcasting, manufacturing, logistics, etc. She has made an effective contribution in the book Service Tax Guide, authored by C.A. Sushil Kumar Goyal, Central Council member of ICAI and also a member of editorial board of GST monthly bulletin Tax Talk. She is passionate about reading and interpreting tax laws. She believes in empowering her clients by educating them and simplifying the rules as much as possible to facilitate informed decision. And that's very interesting too. And today, these three speakers will be sharing with us their expert opinion on GST for real estate. The topics for the day are issuance of credit note, time limit, adjustment of tax and refund applicability, document compliance, cancellation of flat booked in service tax regime, cancellation of flat booked in old GST rate, cancellation of flat booked in new GST rate. And now let's learn more about this from our speaker. And I request Mr. Venugopal sir to take over from here.
Thank you, madam, for your kind introduction. And
Thank you, sir.
I thank RERA Consultants LLP in coordination with Naredco and Opaza for bringing out this knowledge series on real estate, a topic every month. And that is definitely very good of them to give expert opinions on this industry. And I should thank Ashika for making the whole presentation together and in her endeavor of upgrading knowledge to the clients and a threadbare analysis of the issues. Friends, though today's topic appears to be simple on GST impact on cancellation of the flats, which might look like, okay, a single topic, per se, this itself has a plethora of issues. Feel free to put your questions in the chat. The way we would take through is we will take up the legal provisions, practical aspects, and we will take the Q&A. Other speaker, Rajesh Kumar, he is having a hearing in the department, so he should be joining the session very soon. On this note, let me start the session, and just to keep it a little interactive, I just want to know whether the screen is visible. Are you able to see the screen? If yes, just put it in the chat as yes, please. And especially when these virtual webinars have come, so it might appear that I am talking to myself and other participants are there, not there. Okay, I could see 3 people, 4 people saying yes. Okay, good that, okay, you are attentive and my voice is also reachable. All right, so let's begin the session. Ashika, would you start?
Yes. So before moving into about the critical issues in the cancellation, we would first like to give you about the brief of basic provisions, that what are the basic provision dealing with this cancellation. So when we come to the first part, it is a construction service. Now, the question now over here arises, why we are discussing construction service? We all know what is the construction service. But is it the actual case? Everybody know what's the construction service is? Because it's important to understand how they have drafted this definition in order to see the taxability or charge on the same. If you will read this service definition, it has been mentioned as construction of complex building, civil structure, including complex building intended for sale to a buyer, wholly or partly, except where the entire consideration has been received after the issuance of completion certificate, where required by competent authority, or after its first occupation, whichever is earlier. So if we go through by this definition, it is said that construction of complex and building is taxable where you have received even a 1 rupee before the issuance of completion certificate. So sometimes people think that as we have not realized anything, though the booking has been made, though the agreement they have entered into before the receipt of completion certificate, no amount received. So they think no GST is applicable on the same. But the situation is not like that. what you have to see when that agreement has been entered. If the agreement has been entered before the issuance of completion certificate, then you are liable to pay GST on the same, irrespective of the fact whether the consideration is received before before completion certificate or after completion certificate. Sometimes people think like a flat, for example, if I take 1 crore is a flat value, they think that before CC they have received 20 lakhs. So only on 20 lakh they are liable to pay GST. Whatever the amount they have received after CC, 80 lakh rupees, they are not liable to pay GST on the same. However, this is not the situation. If the agreement has been entered before CC, any amount has been received before CC, you are liable to discharge GST on the whole amount, that is on 1 crore. It's not the case, the amount which is only received before CC, you are liable to pay GST. So this distinction is required to be kept in mind, how the definition has been framed. In a similar way, if we go through the bullet number 4, it is mentioned that it should be intended for sale to a buyer. Now, if the construction, if we say it is for self, then obviously no GST can be paid on the same, because for one cannot provide service to oneself. So whenever the construction is done, it should be done with the intention for sale to a buyer. So if it is done with such a motive or with such an intention, then on that construction, you are liable to pay GST on the same. Even if we do go through the expression construction, construction is not only limited to what we say new construction. It also include addition, alteration, replacement, remodeling of any existing civil structure. So we have to keep in mind, it's not that whenever someone do new construction, then only you will fall under this head and you will be liable to pay GST. Even where there is a 10th floor building already constructed, over there you are constructing one more floor, that will also fall under this category and you will be liable to pay GST on the same. Sir. Time of supply. This is one of the important factor which we have to see in order to discharge our GST. Now we learn that this is the construction service. Now the question arises, when we have to pay GST on the same, when our liability arise on it. Is it arise only when we receive the payment, or it arise on the entering of the agreement, or it arise when I hand over that flat for which booking is done to the customer? So for that also, in the law, they have specifically provide when the liability to pay tax will arise. They have mentioned that it will be earlier of the following: date of issue of invoice, date of provision of service, or date of receipt of payment. So on basis of this three, it will be on the basis of this three, your liability to pay under GST will be determined. So you can't say that when I enter the agreement, my liability arises, or when I will hand over that flat to my customer, then the liability will arise. You have to follow section 13 in order to determine what's your liability is it. Now, as we go through when I am liable to pay tax, but to determine that liability to pay tax, three things on which they depend. First one, date of issue of invoice, which we basically know in a construction line, the consideration for due, when the consideration is due, they have form a slab, like for ground floor construction, 10% will due. On completion of first floor, 20% will be due. 30 on completion of third floor, 30%. So on that basis, a contractor or a construction line business, real estate, raise their invoice that when the ground floor completed, they raise a 10% demand note. Now, but if you go for the date of provision of service, obviously date of provision of service will be completed when I will hand over that apartment to the buyer. So it is important to understand in construction line, date of provision occur in very much later period of time or later phase of time in comparison to date of issue of invoice or date of receipt of payment. Now, date of receipt of payment, obviously at the time of booking, they give us booking advance amount, and advance as and when we receive, we are liable to discharge GST on the same. So in the construction line, two things are important. You have to see when your milestone, as per the agreement, your amount become payable to you. On that basis, you have to determine your GST liability and pay to the government, not on the basis of when you receive the payment or when you hand over that flat to your buyer.
So one point which I would like to highlight here, what Ashika is mentioning, and if I have to take back to the previous slide. So the time one has to pay GST technically or from a common man understanding is when I provide a supply, and supply here includes goods and service. So in goods, I give the goods. In service, it is the service. So the time of supply is when the supply is happening. So that is where I have to pay the taxes. Now, if the taxes have to be paid at the time at which I am making the provision of supply, for a construction industry, my invoice issuing happening multiple times. Provision of service, if we see, like customer has come to me for a completed flat. Now, customer has booked in 15th floor. So once when I complete the apartment in all respects and give it to him, that is when the completion of service happening. And date of receipt of payment also, it is like in a multiple times he will be making the payments. So technically, if we see, it is not a supply in one go, it is a supply in continuous goes. So that is where the provisions for continuous supply of service is little different from a regular supply of service. And the provisions for continuous supply of service says, firstly, we should understand whether this is a continuous supply. 2 subsection 33 of the Act talks about continuous supply. Yes, Ashika. Ashika, you're on mute.
So as we discussed, what's the construction services? What's its liability to, when its liability to pay tax arises? Now, another important factor, which in relation to construction service, a real estate sector should know that it is a continuous supply of service. Now, what does we mean by continuous supply of service? That is also defined in the Act. They are saying that we will consider a service as a continuous supply of service, which is provided or agreed to be provided continuously or on a recurring basis under a contract for a period exceeding 3 months with periodic payment obligation and include such supply of service as the government may be notified. So as we all know, construction take around 3 years, 4 years, 5 years, depending upon the project they are executing. And most of the time it will be exceeding 3 months. So it will fall under the head continuous supply of service. Now you will be asking why we are discussing on continuous supply of service. What is its relevance in relation to construction service? Its relevance is to the issuance of tax invoice.
Yeah.
Because for a continuous supply of service, they have given specifically when they have to raise the invoice. Like as we discussed in our previous supply, actually the provision of service happened when provision of service completed when I hand over the flat to my buyer. It's not happened before that date. However, in order to demand tax on the same, what the government has done, in the law, they have provided that in case of continuous supply of service, where the due date of payment is ascertainable from the contract, then you are required to raise the invoice. Where the due payment is not ascertainable from the contract, it's obviously you have to consider receipt of the payment. And where the payment is linked to completion of event, then invoice shall be raised. So they have given when you have to raise the tax invoice, and that tax invoice linking they have done with the agreement, because in the agreement we every time mention that what will be my completion of event when the payment will become due. So on that basis they are asking me to raise the tax invoice. not when actually my service is getting completed. Even before that completion, they are asking me to pay GST on the same, irrespective of the fact whether you have received the payment or not. Because if you will read this section, then you will find that invoice is nowhere linked to receive of payment. Therefore, bullet 1 and 3, they have linked when it become due. So whenever your payment become due, you are liable to discharge GST on the same.
Right. So, friends, so one distinct point which I want to highlight here is this section 13, which is talking about time of supply, is merely for the liability to pay tax on supply of services. Now, section 7, which talks about supply includes agree to provide supply also is also supply. So here mere raising of an invoice doesn't means that supply happened. So I could also raise an invoice in advance and the supply can happen. So supply is little independent of actual supply, but to collect the taxes in time, the provision for time of supply has been given. So the time of supply means, or it is a deeming provision when the supply is deemed to happen for discharge of the taxes. As we all know, in case of an apartment, I can actually provide the service to the customer when I deliver that apartment to him. So hence it is a continuous supply of service. I think we can explain with one example.
Now, now coming to the example. Now, let us suppose that your flat has been booked on 5th Jan 2018 and the value of that flat is 1 crore. On that booking, you receive 5 lakh as an advance booking amount. Now, the first installment become due on 15 Feb 2019, on which 10 lakh rupees is payable. Now, second installment due on 15 March, again 10 lakh was due and you raise a demand note to your customer asking them to pay this amount. Now the third installment become for third, they have made the payment of 5 lakh. Now the question arises, as per GST law, what do you think? On what amount I am liable to pay GST? 1 crore, 10 lakh or 20 lakh? You can give your answer in
this is only for financial year 2018-19. So we all know that the customer has agreed to pay 1 crore. Now the question is, GST liability is there on 1 crore. So for financial year 18-19, since the agreement has already been made for booking for 1 crore, so the question now is, should the liability be 1 crore, or I have received a booking amount of 5 lakhs in 15th Jan and another payment of 5 lakhs on 20th March. So I received totally 10 lakhs. Then should the GST be there on 10 lakhs, or the installments are, the first installment is due 10 lakhs and second installment is due to 10 lakhs on 15th February and 15th March. So should the GST be discharged on 20 lakhs? So as per the milestones, the installment, there are 2 installments due, which is 20 lakhs. So we'd like to hear what is your view for the financial year 2018-19. Should the GST liability for the builder be on 1 crore, 10 lakhs or 20 lakhs? Okay, I can see Shankar saying 30 lakhs. Mr. Sandeep says 20 lakhs. Madam Tapsu says 20 lakhs. Shankar now feels it is 25 lakhs. Okay. And friends, there is no right answer, wrong answer. The more you participate and give your answer, maybe you will get more clarity into it. We now have 2 more values, 25 lakhs and 30 lakhs to it. Others, what do you feel? You can just type the answer. I can see the participants are there. Mr. Hanif is there, Madhulata Madam, Nagaj, Sandeep. Neha, Somanasya, people. So just give your view. What do you think will be the liability? Let's make it participate. Ms. Devraj feels it is 20 lakhs. All right. So let's look at what would be the liability. Yes, sir.
If we go month-wise one, then in January month, it will be 2019. It's mistyping 2018. So in Jan month, I will be liable to pay tax on 5 lakh. Feb, coming to Feb, as my first installment has become due on Feb, on which 10 lakh was due, out of which 5 lakh on January month, I have already paid the tax. So on balance 5 only in the month, for the month of Feb, I will be discharging GST. Now coming to the month of March, installment become due 10 lakh, payment received 5 lakh. So accordingly, I have received a payment of 5 lakh, which is for my 10 lakh due. So booking amount 5 plus 5. So toward first installment only I have realized 10 lakh. And second installment is due 15 March over, with respect to which I have not realized any payment. So in Jan month, I will be liable to pay on 5 lakh. In Feb month, again 5 lakh. In March month, I will be liable to pay GST on 10 lakh. So totaling to 20 lakh, I will be liable to pay GST. Now, how we have come to this conclusion, that also we will want to explain you. Like in case of advance, your time of supply is when you receive this advance. So it was received in the month of Jan. So you are liable to pay in the month of Jan. Now coming to first installment, Feb. Now, though no money has been received, only 5 lakh has been received, balance 5 not received. However, as we discussed in time of supply, that on the basis of completion of event, you have to raise tax invoice. So for Feb month, you will be raising one tax invoice of 10 lakh, against which you have made a realization of 5 lakh, and you have also paid tax on that 5 lakh. So on balance 5 lakh, I will be paying. Similar is the situation with the March month. Now, the amount which is received in March month, on that I will not be paying GST, because that will be adjusted against my amount which is due against the first installment. So accordingly, we will be liable to pay GST on 20 lakhs. If
Right.
anybody have any clarification required or any questions, they can ask. Now, moving on to the main topic of today. Now, why we have discussed all this basic provision, you will understand when we will start discussing the cancellation. Though the words seem so simple, cancel. But however, the GST impact in cancellation is not so simple. So first we will start with the situation 1, where you have your construction relates to pre-GST regime, booking also done in pre-GST regime, but cancellation made in GST regime and in GST regime of old GST rate. Old GST rate we are talking about over here. Now, we have divided this cancellation part into 4 scenarios. First, where the booking is done in service tax regime, cancel in GST regime. Second, where booking is done in GST regime and cancel in GST regime. But as you all know, in April 2019, they have come with new rate with no ITC. That's why specifically we have taken this topic. Another one is when there is a cancellation and upgradation, where a buyer say you from 2 BHK, you want to shift it to 3 BHK. In that situation, what will be the impact? And even cancellation between different projects also happen. So in this 4 scenario, we have covered the topic of today. Moving to first scenario, where the flat has been booked in service tax regime, but cancel in GST regime. Now, what would be the situation? Taking our previous example, continuing it with it, 1 crore rupees was the flat value. 20 lakh I received in service tax regime, 20 lakh I paid service tax on the same. Now coming to GST regime, my buyer canceled that. Now what should I do? In your opinion, what practice you are following? You can write down in chat box what you are actually doing as of now.
I'm sure most of you would have also encountered, because some projects got delayed or various situation, the customers would come back and cancel. And right now we are taking the first scenario where the project got booked in service tax and under GST. Now they come back and say, I would like to cancel it. So some of you would have encountered. What do you think out of the questions that have been framed? Can the service tax which have been paid by the builder, can it be refunded back to him from the government? And should he pay to the customer with the tax amount or without the tax amount? What do you think? So I just like to hear from members. Madhu Malati madam, I would request off the topic questions. We will take the questions and then definitely we'll take up all the questions. You can take it. Okay, I think members are still thinking. Okay, deduct the service, Tabasu says deduct the service tax paid against the unit and refund the balance amount, because I will not get the service tax from the government. Okay, got it. And that, I think that's the most appropriate practical answer. Let's see the legal provisions.
So as we discussed, whatever the taxes we have paid under pre-GST regime, we cannot adjust against our GST liability. That is the fact. And we also cannot avail input tax credit of the tax paid under pre-GST regime. Both the situation, full no, cross, not applicable. The only option which is available with you is to go for refund of tax paid. So you can file a refund of tax paid under pre-GST regime, that is of service tax amount in Form R. Earlier it was Form R, by which we can file a refund claim. So you have to make your application manually in Form R with all the supporting documents to your jurisdictional officer for the purpose of refund. Now another question arises, what would be the time limit applicable for such type of refund? As we know, earlier section 11B of Central Excise Act, which is also applicable to service tax, was there. And as per that act, we have to file our refund claim within 1 year. Now the question arises, it is said within 1 year from the relevant date. Now what would be regarded as relevant date? As suppose for the example, and it was booked in 2016, June 2016, and my flat got cancelled in 2019. So some part of it relate to service tax, some relate to GST. Now, the part which relate to service tax amount, what I will do? Now the cancellation has been made in June 2019. Now on June 2019, from that date, I will calculate my relevant date, or whether I should consider my date of payment. Means whenever I make the payment of service tax, that will be considered for the purpose of calculating this 1 year. Now let us understand what does the relevant date was defined under section 11B. Now section 11B define there are different scenarios where the goods exported, returned, manufacture required. But in our case, if we go, it will be under residual one. In any other case, date of payment of duty. Now the question arises, now it's a service tax regime 2016 booking. 1 year if I calculate it from here in 2019 when we are standing, then how that 1 year was obviously going to lapse if from that date of payment I calculate. So what should I do? Now, though the laws speak that date of payment of duty, however, there are judgments which says that I will consider date of cancellation of flat by customer as my relevant date, and from that date we shall calculate our 1 year. Now these judgments are very important. It will come handy whoever has any such type of situations. So mark all this judgment, though the PPT will be shared. So in this judgment, they have held that date of cancellation of flat, I will consider as my relevant date. And from that date, 1 year, I shall calculate. And accordingly, you can go for refund application. However, it is litigated. Maybe the lower officer will not agree with you and will not grant you the refund at the first stage. However, when you will move forward to tribunal, the chances are there that refund will be granted. Sir, over to you. Sir, it's mute.
Again, the practical, the advice or suggestion is considering the cash flow. See, when the refunds have to be made, the customer would always definitely seek that, see, I have paid you an advance of 50 lakhs. Now, internally, you have bifurcated that 50 lakhs, 14.5%, 15% as the service tax and some portion as the towards the property. From my perspective, I paid you 50 lakhs. I need a refund of 50 lakhs. So you can always get into a contractual saying that, okay, yes, now I have applied for a refund of this matter with the service tax department, and post upon receipt of that service tax, you can always fight for it. Definitely, there cannot be any unjust enrichment. So you cannot end up not paying to the customer and retaining that money. Moving to the next scenario, cancellation of a flat booked in GST, but however, two types of GST regimes, if I have to say, for real estate industry. First, April 2019 is the cutoff, where a new tax regime for the real estate industry has evolved. So now we are looking at an apartment which has been booked under prior to April 2019, and it is cancelled after April 2019. So let us look at the what are the documentation, how do we do it in this scenario? Yes, Ash. Okay, so here I think we now need to understand a concept, that's a concept of credit note. See, under GST, we have section 34, which defines what is a credit note. And okay, Rajesh sir has joined. Madam, can you make Rajesh sir also co-host, please, and enable?
I think when I got
yes.
no, I joined beginning only, maybe 5-10 minutes little delayed because of the session with the principal commissioner of on the same real estate. In fact, okay. No, just to add a couple of points with what Ashika was mentioning. One, about the time of supply, she explained it very well with all the provisions. But at the same time, practically, I would like to suggest the clients. So essentially, you would have observed your time of supply is dependent upon the terms and condition in your agreement. So, so this gives actually a scope for designing your time of supply, because as a practice, most of the builders would have been paying taxes only on a receipt basis. So which is actually leading to a non-compliance as it is. And out of my experience, I would like to share, if I ask, why are you doing so? So same methodology we are following in service tax, we are doing it same in the GST. If you, some of you may be already having a sufficient ITC in your books of accounts. That being the case, by not following a time of supply based on the, as is there in the law, then since you're already having a credit, there may not be there need not be an apprehension for the old running projects. So look at that from that perspective is a one aspect. Second aspect, look at your terms of your agreement with your customers, subject to RERA provision of altering the agreements, and look at that. That is a second point I wanted to add. Third, Ashika talked about this aspect of refund claim. That one more line of argument I had taken in a similar set of case was that there is this is actually a central excise provision of section 11B, where there is a one of the clause which Ashika presented was goods returned. The date of limitation starts from the date of receipt of goods into the factory. So applying the same mutatis mutandis for service tax law on cancellation of the apartment, it is equated to returning of the services So that clause has to be invoked, and the case laws has to be substantiated by that more one line of argument. And for your information, presently there is a couple of matters where we are contesting before Karnataka High Court. The hearing was in fact scheduled today or tomorrow, I think. I don't know what is the outcome yet because I was traveling. So we'll update you once we get any outcome on that aspect on this. So these are points I thought I'll share. Please, you can continue, Venu. If anything is, I'll just add it. Thank you.
Great. And that's what I say, that your presence would add value. And members, Rajesh handles all litigation tribunal matters. So from the legal perspective or the court's perspective, we get the more first-hand views. Okay. Coming to the second type of cancellation, that is booked under the GST regime, cancelled under the GST regime. I'll be taking two scenarios. Scenario one, cancelled after 1st April, cancelled before 1st April. But for both the scenarios, one thing which is common is it's a GST tax which has been paid. Now, let's understand for the GST tax that have been paid, how do we actually treat the tax liability? Now, members, I want you to understand and appreciate that GST is more a technology-driven law. I would say the compliance to GST is more to the technology. So the documentation is also equally important or necessary to that extent. Under GST, we have a concept called credit note. What is this credit note? It is equivalent to like the goods return and service tax return, the services return. So section 34 of the Act says, when a tax invoice has been issued, so invoice is raised, and after raising the invoice, I have realized that I have raised the invoice with excess tax, taxable value is higher, or the goods have been returned, or the services which have been supplied are deficient. Now, what is deficient is not defined under the law. In my view, deficient means I agreed to provide an X amount of service. I have provided a lower quality of service or no service or anything lower than what is agreed is a deficiency. If I have provided 10% of what I have agreed, then there is a deficiency in the service what I have agreed to provide. So can the credit note provisions be applicable in this? The answer is yes. The deficiency, since the word is not defined, it is more like an inclusive definition. So the scope is wide, it can include. Okay. Having understood that the credit note can be raised, till when I can raise? A couple of points. I want you to be very careful because in the next slides to come, there are different positions I would be taking, and I'll be explaining why a different position I'm taking. First and foremost, under section 34, the time limit within which one has to raise invoice is the September of the subsequent financial year. If I have raised an invoice in say April 21, by September of the next financial year, I shall be raising the credit note. So there is a time limit given. Second, I have also said earlier, the incidents have to be passed on. So I should also ensure the recipient should not take input tax credit twice. So he should reverse if he has taken input tax credit. If I'm reducing my liability, I should return back the money. So there cannot be unjust enrichment. So incidents should also be passed on. So then the benefit of reducing the liability, that would be applicable under the law. These are the provisions of the law. Now, how do we apply to service tax, the GST? Let's look at it. So summary, the time limit to issue is section 34 or filing of annual return, whichever is earlier. And the question that comes is, okay, if I miss the time limit, I did not do it, how do we handle? So there is an option to claim refund. I will again come back how the refund can arise. and where does that provision, legal provisions are there. First scenario, we will assume that everything is well within the timelines. Can the credit note at all be issued? The answer to it, which I said yes, even the FAQs issued by the CBIC. The question serial number 22, where a question was asked, how do I compute adjustment of the tax in a credit note issued under section 34 by a developer for a unit which is booked prior to April 2019, on which GST has been paid at an appropriate rate, say 12%, 18% under rebate at 1/3, it becomes 12% effective, and it has been cancelled on or after April 2019. So the CBIC viewed this way. It said developer first has to issue a credit note. And they said the credit note has to be in compliance with section 34. So they are saying that the September time limit has to be maintained. And this can be in case of there is a change in the price or cancellation of booking. So they said even for cancellation of the booking, they said the credit note can be raised. Now they further said that the provided that the amount received in excess on consequent of issued of credit note, it has to be refunded to the buyer. So I shall refund the amounts to the buyer. I cannot have unjust enrichment. And by when it should be done, the developer should be doing it by on or before September of the next financial year. In doing so, I am refunding the money to the customer. I will be in cash loss. So they said, no worries. Developer shall adjust the tax that is paid in the return in which he is filing, the month in which he is filing the return. Let him make the adjustment of that. So that's what they have given. And they have also explained with an example. So the example they have said is adjust the liability. Let's say a developer has paid a tax amount of rupees 1,20,000, effectively at 12%, whatever the thing. So considering the booking amount was 10 lakhs. So customer paid 10 lakhs to the developer. On 12%, developer paid 12 lakhs to the government. When did he pay? Before April 2019, he had made the payment of taxes. Now, customer came back and said that I want to cancel. And when did he come? He came after April 2019. And the April onwards, the subsequent payments were being made at 5%, 1%, which we all know. So the government said, no problem. You can make the cancellation, refund that money. Whatever the money that you are refunding, you have an obligation to pay taxes the current month. So there are other flats which are continuously being sold. Those flats which are continuously being sold, you have a tax liability to pay at 5% if it is other than affordable, 1% if it is affordable. You have some tax liability to be paid. Adjust in it and make the payment. Again, the condition, provided the entire amount is refunded. So there cannot be unjust enrichment. You refund back the full amount to the customer. You claim it back from the government. Parallelly, earlier regime, when the unit got sold, I have availed an input tax credit. During the transition that came in 1st April, we have also reversed the input tax credit based on the transition returns happened. This unit was treated as a booked unit. I did not reverse any input tax credit. Given that now this unit got released and will be sold in 1%, 5%, I should also reverse the input tax credit which I have availed proportionate to this for the earlier unit. So this is the clarification given by the government. Now, there are a couple of follow-up questions that would come up. I'll just take it. The last scenario is cancellation of the flat, which is booked under new GST regime. So the unit is booked under new GST regime, cancelled under new GST regime. So booking happened after 1st April, cancellation happened after 1st April. Provisions of the law would be very same. Issue a credit note for the original invoice. Additional condition, would the reversal of input tax credit? Now you may ask, sir, in the new regime, I have not availed input tax credit. So I'm saying there would be commercial apartments. So rule 42 would apply. So if you have availed anything and this unit remains unsold as on the date of OC, you will have to parallelly follow it. Now, provisions under GST seems to be very simple and straightforward. You issue a credit note, refund it, and the questions seems to be very clear. But however, one point in the credit notice, it should be issued on or before September of the subsequent financial year. Now the questions that come. See, the customer, let's say, has booked in March 2021. The current year, March, he has booked the apartment. 6 months, 7 months later. In October 21, he came back after the second lockdown. So he booked the apartment, lockdown happened, COVID, and unfortunately his cash flows went for a toss. He comes back in the month of October and says, sir, I do not have ability to proceed further. I intend to cancel it. So I'm talking of a scenario now that September timelines have crossed. What would be the fate of the builder? Section 34 doesn't allow for a credit note to be issued on or after September. Now, how do we deal with this scenario? Here comes the distinction which I wanted to bring, which I said at the beginning. Is section 13 really talks about supply, or it is only for liability to discharge the tax? So the time of supply, liability to discharge tax. So that are the important parameters. In this case, I want to draw attention to a clarification issued by the CBIC in some other matter. Let me bring those two matters. So I'm talking about units which have been cancelled after the September due date. So what is the clarification? So the facts are RREP project. So the advance has been received in April 19, cancellation happened in June 21, 2 years later. The questions which we have is whether the tax is already paid by the builder. Can I take the refund? Should I refund the money to the customer with GST? Because this is the common thing that comes up is customer says, see, I don't care about GST. I have paid you full money. I want full money back. Now, if the developer pays that money, say if the marketing department or the operation department commits on that, finance department comes back and says, see, where is the cash flow? I have already paid. Government will not give the refund. So what will we do? It's always a fix, right? So let's look at the legal position. And here is where I want to give the reference to a circular issued by the CBIC. This was the circular issued in April 20, circular 137, where one of the question which was raised is advance is received for a service contract. 13 subsection 2, we have seen the money received, time of supply arises, raise an invoice. So supplier has raised the invoice before making the supply of service. So of course, though the facts and everything is not identical, we can definitely draw a clue, like how under the excise where Rajesh sir explained when the goods return, the time, the date of the refund begins from the date when the goods refund. We can draw parallel analogy from this as a thing. So supplier has issued an invoice before the supply of service and he has paid the GST. Question comes is whether he can claim a refund of the tax paid and adjust in his return. So the CBIC circular said, given that invoice has already been raised, let the supplier issue a credit note. Let the supplier issue a credit note. No need to go for claiming of the refund. Section 34 permits to issue a refund. Adjust it in the tax liability that is arising. Now, further to that, it also said, in case if there is no output liability for various reasons, then the registered person may proceed to file a refund claim under excess payment of taxes through RFD 01. though this is not a circular issued for the real estate industry, this is issued in some other context. Definitely, this can be taken as an argument. And since the service is not provided, what is the service the customer asked for? Customer asked for an apartment. Is the apartment delivered? The answer is no. So service is not provided. Then why did you raise an invoice? 31(5), section 13. I am complying with, since money has come in advance or the agreement has been made. So I have raised the invoice to discharge the tax liability. Hence, the refund can be claimed. By the way, there was another clarification issued by the same circular is, in case if there is no invoice which is raised, credit note concept comes only if invoice is raised. So issue number 2 also has been addressed where the invoice is not raised. Money has come, taxes have been paid as if it is advance. GSTR1 table 10, I have to pay the advances, tax on advance, so it has been paid accordingly. So even if there is no invoice which has been issued, since he is refunding back the money, let there be a refund voucher be issued, and the taxpayer, which is the developer, can apply for the refund by filing RFD 01. So these are the 2 circulars that would come in handy to fight for the case. Now, is it a straight? Again, the answer is no. Like as Ashika very much said, the officer is always a revenue bias. He might definitely want to say that, no, I wouldn't agree. But when you go to the department, higher level commissioner appeals or the tribunal levels, definitely this is a fit case for winning. Are there any judgments under GST? GST is a new law. There are no judgments that have come up. But again, in my view, it is a case that is worth fighting and claiming a refund back from the department. Rajesh sir, anything you would like to add?
I think, Venu, your proposition, what you explained is appropriate and also is equally, it can be used. But practically, it may be a situation, as you rightly said, it all depends upon the company's policy. In fact, you gave it, you explained with very clarity that marketing team with service accounting team. I think you can share what the majority developers are doing. They're only refunding the basic amount and leaving it to the clients.
Yeah. So here again, now that real estate industry is witnessing one more agency, they have to fight with RERA, RERD Act. So the customers are now approaching the RERD tribunal is there in RERA. So there are some cases which have come in the favor of the customer, saying that let the refund be given. So if as a builder, if you don't act and you end up paying money to the customer and you are not filing the refund within the time limit, you will be losing. So my practical suggestion is you can enter into a contract saying that, okay, yes, we would be fighting for the refund with the department, and make an attempt, make a claim and make a back promise so that once that comes in, you can refund it. But yes, this is a commercial which you have to amicably handle it. Now the questions that also come up, there's like, how do I present this in the returns? There are some other questions which are there to address. Today's session we would exceed. I think I would take another 15 minutes to complete it. Let's look at how does the builder handle it. In case if he is issuing credit note and wants to adjust with his current tax liability, then in GST or 3B, whatever the tax due which is there for the current month, he has to lower his tax liability. So he has to reduce his tax liability in the current month and pay. What about is in GSTR1? Most of the customers under real estate are unregistered. Let's take registered also, no issue. If it is an unregistered customer, my output liability, the demand notes which I have raised, I have reported in table 7. Table 7 should always be shown net of the supplies. So I will reduce the liability in table 7. If it was to a registered supplier, there is a facility to raise a credit note. 9B of GSTR1, I will be showing it. Then the another point which one have to consider is portal do not accept negative liabilities. So 3B, in the current month, assuming I do not have any liability. If you say that there is no liability in the current month, then you have to wait. You have to go to the next month. So that is where circular 26/26, this is the last circular in 2017, which said that if you cannot adjust any liability in the current month, carry forward to the subsequent period and adjust. So this is like our timing difference in AS22 deferred tax liability, the way we compute income tax profit and make those adjustments, something like that. If you think that you cannot adjust at all, there is an option to go for a refund that is provided in the circular itself. You can go for the refund. So one other example here, the flat booking date is 11th June 2016 and it is cancelled in 2017. This is service tax regime. Second, August 17, GST regime cancelled in pre-GST. So against these each scenarios, how do we handle it? This is a summary slide. So I've given the answer here. Action to be taken if it is the service tax regime. So service tax earlier, it cannot be adjusted under GST. So fight for the refund under GST. Scenario 2, it is GST regime well within the time limit of section 34 credit note, raise a credit note and reduce the tax liability. Case 3, I crossed the time limit of the credit note. You cannot issue the credit note, apply for refund under section 54. Then the scenario 4, March 18 to December 18. So again, I crossed the credit time limit, apply for refund. Pre-tax regime and new tax regime. Again, so if you have time limit, you can do it. Otherwise, apply for refund. All right. So these are the various things one have to consider. Now, the question that would also come up is cancellation charges. Ashika, would you want to explain the cancellation charges? You have a different point here. So most of the times when the flat is cancelled, the customer is charged some amount of the fee, a cancellation fee. Question that comes is it subject to GST? Then if so, at what rate? Yes, Ashika. Ashika, you're on mute. Oh, okay, you're on mute. Can you unmute yourself, please?
Now, cancellation charges is also one of the litigated view. Why it is litigated? Once let us take you through the basic thing, then we will discuss. Now, as we all know, whenever some of the buyers cancel the flat, part of the amount, either we retain it in the name of cancellation charges or not, whether we name it as a cancellation or not. However, we mention in the agreement, if you cancel it, 10% of the amount we will retain it, or 10% of the amount will be charged as a cancellation charges. Now the question arises that this cancellation charges, whether it will be considered as a separate supply or whether it will be considered as a part or partial of main supply. Now, why we are saying it, you all must be remembering in the act, even many of them must have got notice on cancellation charges in service tax regime if they have not paid GST at the rate of service tax at the rate of 15% full tax rate, or they have opted for the construction service rate. Now, there is one provision which says agreeing to an act, tolerating an act, refraining from an act. So cancellation charges, what the department try to do, they try to classify under that clause, that is declared service under service tax regime. The same is also there in GST and in Schedule 2, where they give the classification of service, where there they have considered as a service. So they try to classify under that head and ask us to pay GST at full rate or service tax at full rate, because even in pre-GST regime, there you were eligible for the there was on construction service reduced rate. Now the question which arises whether it should be considered as part or partial or a separate supply is disputable. Government department try to stabilize in separate supply so that they can collect a tax on 100%. But if we see whether this cancellation charges would have arisen if the main contract was not there, because of cancellation of main contract, this situation has arisen. First. Second, my intention was not to cancel this agreement. My intention was to buy that flat. However, maybe due to any reason, I have cancelled it. So whether we should say it's a part or a separate supply. Even in, we also have different view. It's, if we say that, in my view, we can consider it as a part and partial of main supply, because if the main agreement was not there, then this cancellation charge would not have arisen. However, Venu sir have different view.
Yeah. So what Ashika said, by the way, it is all litigated, and the view of Ashika is very clear that the cancellation is arising out of the principal supply and it should be akin to the principal supply. Now, my point is, in this contract, I have already provided for a cancellation clause. So the contract includes two supplies, and the condition to fulfill the contract, if it is failed, and a consideration for such failure is mentioned in the contract, could be an dragging to a second contract which will be independent of the principal contract. So it would be leviable as a tolerating an act and at 18%. So that is my view, and definitely we can both are litigatable. So there is a small example which is prepared. Yes, Ashika.
So, but it will be safer if we consider as cancellation as separate and pay GST at the rate of 18%. Then obviously department will not come to you, will not ask anything from you. It's a previous one. Yeah, previous slide, sir. Even that cancellation versus credit note, this is also litigated. Now we all know we don't issue credit note for cancellation of a contract. However, though in construction line, they have asked us to issue credit note, not directly, but by way of clarification, they are somehow hinting on that on cancellation issue credit note. But if you see both the expression cancellation and credit note, they both have different meaning. When we say cancel, it is actually whole work order is completely cancelled or existing invoice wholly cancelled. But however, the credit note differ in the same is because in that case, only part of the amount is cancelled. It's not that actual bill is get cancelled. So in going by that concept, that credit note cannot be issued somehow, but why to go in all this thing when the department itself is clarifying that on cancellation of contract, you raise credit note. It's just one of the view. Still now there is no dispute or no litigation has arisen on this part.
So if we go adopt that route of the credit note, so how does it show up? Is the let's continue the original example where the flat amount was 1 crore, and I have raised an invoice for first installment and second installment 10 lakhs and 10 lakhs, which is 20 lakhs. On 20 lakhs old regime, so I paid at 12%, 2.4 lakhs. So someone is cancelling, so I'll cancel full amount 20 lakhs and 2.4 lakhs, refund full amount to the customer. Now, cancellation charges is said. Let's say 4 lakhs is the cancellation charges. So out of 20 lakhs, I withhold 4 lakhs and pay only 16 lakhs to the customer. So the one view which Ashika says is, since cancellation is done for 4 lakhs, so the levy, the tax liability for 4 lakhs will not be at 18%. This will be treated at par with the tax liability of this. So accordingly, the credit note will be inclusive basis on 14.08. So since I'm refunding 16 lakhs to the customer, So I would be charging 14.08 plus 1.92 on an inclusive basis. And this again, it's times to test. Definitely department would say cancellation charge is an independent supply. There would be a levy. But yes, this is a view one can consider and take. Then comes the next issue, swapping or upgrading of an apartment. So let's say today, after the COVID, people are now looking at having an independent room to work from home or a separate thing. They want to upgrade, or some reasons they might want to downgrade, whatever. So Mr. A has initially booked 2 BHK. Thereafter, he says, give me 3 BHK. Let's say 1 crore for 2 BHK, 1.5 crore for 3 BHK. He has paid 90 lakhs for the 2 BHK. At the last milestone, he says, look, can you give me an upgrade? There is an upgrade available, 3 BHK is already available. Now, should the builder cancel the full and refund the 90 lakhs or raise a credit note for 90 lakhs, raise a separate invoice for 1.5 crore for 3 BHK? Is it the two separate supplies, or is it an independent or a continuous supplies? How do we treat it? Now, again, there is no straight answer to it. When you look at the definition of the credit note and a debit note, where the goods are returned or deficient, whatever. Like take that scenario where if let's say I'm a dealer of say mobile phones. I have sold 10 phones. Customer came back and said, see, I need 2 more phones. So I'm raising to the original supply itself, I'm raising 2 more phones. Can it be through debit note, or should there be should I treat the earlier consignment, return back and do it? Now, you may say in the scenario of phone, the phones are not coming, so there is no question of credit note. Here, the 2 BHK is coming back to the builder and 3 BHK is going. So again, under service, we cannot definitely define what is the provision of service. Practically, people resort to 1.5 crore is the new value. Original value was 1 crore. I will further raise an invoice for the balance. I've already raised for 1 crore. I will be raising the invoice for balance 50 lakhs. This is what practically most have adopted. Am I cheating something to the government? Am I doing something wrong? The answer is no. Tax liability is intact. But procedurally, is that the right thing? In my view, the original flat got cancelled. You have to raise a credit note for the original flat and raise a separate invoice for the new flat. Now, if that credit note time limit got moved on, then what is the right way? You have to go approach for a refund. Practically, does it work? Again, practical view, many people adopt this. Okay, given that the tax liability is being paid, I will be setting it off. So that's how one have to take a call and consider and move it forward. Then there is another situation that comes, the cancellation is happening by virtue of transfer. See, I have booked an apartment and for some reason I am unable to occupy it. There is all the builders have this clause of assignment. If I identify a customer, I can assign the contract to a third person and there is an assignment charges. Now, in case of an assignment, is the builder cancelling and doing a make supply? The assignment, let's say I have booked the flat, I am unable to occupy it. I identify Ashika. Ashika will be possessing it. So we enter into an assignment agreement. Original booking amount was to register the flat in my name. I am relinquishing that right and transferring it to Ashika. From the builder perspective, I have paid say 90 lakhs, 10 lakhs they will be collecting from Ashika and they will be discharging their tax. That's how the transaction. So their supply of service, whatever agreed to me was completed and 10 lakhs is only towards Ashika. So that would be done. Now, what happens to me? I have relinquished my right. I am getting 90 lakhs. Now, do I have to pay? Service tax limit is 20 lakhs. Do I have to pay GST on it? In my view, the answer is no. Though there is no straight answer to it. Let's take one. Q from example given by the CBIC in a press release way back 2017 when the GST got implemented. The question asked was sale of old gold. Generally, when you go to gold shop, you give your old ornament and that much weight is adjusted after wastage and everything, and you get a new ornament. Does it mean are you selling that gold? Here they said that the old gold which is sold by the individual is for a consideration. The jeweler is going to give that money. So the apartment which I am relinquishing is for consideration. However, it cannot be said that to be in the furtherance of business. See, I am not in the business of buying and selling these apartments. Per se, the test of the business is failing. Hence, it cannot be qualifying for supply. So, taking the same cue, whenever a transfer of right in the immovable property is given, whether the previous owner is liable because the right is transferred, in my view, since the customer is not in the business of transferring and doing this transaction, it is an apartment purchased for his personal effect. Hence, this transaction would not qualify for supply. Coming to the last part of the discussion, which is on documentation to maintain. Friends, there's a lot of documents the builders have to maintain. Every project, please note project wise, what are the materials have come, goods sold, what are the booking agreements done, date of agreements, date of raise of demand. In fact, Devraj or someone asked this question, when should I raise the invoice? On receipt? The answer is no. Whenever it is due date ascertainable as per the contract. This is what Rajesh sir also iterated, that the department would come back. Most of the builders are not raising any invoice based on the demand date. So you need to configure in your ERP. Your receipt from customer is not the due date, it is the due on which whenever it is due to be discharged, that is the due date. Please make a track of it. Make a quantitative details project wise, because in the last session, I'm not sure how many of you have attended, we have very clearly categorically said that the input tax credit is, though not available, 80% of the purchases have to be from registered dealers. So you have to maintain category, the project wise books of accounts. So all these documents needs to be maintained. And when you have to raise the invoice, relevant sections have been quoted for reference. So at this point, we will break and take questions. Ashika, anything which is missed, do you think we need to add? Rajesh sir, anything to be added? Anything further to add to the discussion? Anything on the closing note?
Yeah, I think the point which I want to just summarize is many of the points today which we discussed, we would have given two views in many places, and at the same time we have also told scenarios. So obviously my suggestion to the participants here is don't get confused with the two views. Just see which of those things suits your organization, considering the organization policy of risk taking. And two, what is the terms of the agreement with your customer, inclusive of tax, exclusive of tax, what is the terms of the contract, who has to bear the tax. Look at that and take a call, which option to go for. And at the same time, you should also look at what way you can address the future market conditions, because your reputation also is connected to the market. To these type of scenarios. So look at all these aspects, consider all these aspects, and try to take a option which suits you better, rather than getting into a legal entanglement unless it is very much needed and necessary. So these are, though I handle litigation, but I do not suggest for getting into litigation.
right? And members, again, even when there is something to be litigated, don't worry. So we have Ashika and Rajesh are definitely helping you both at the department tribunal and the High Court level. So any matter on litigation, there is sufficient team to really help you out. So let's look at questions from the participants. So participants, some of your questions you might have asked earlier. If it is not answered, you can ask the question now. If you want to unmute yourself, you can unmute yourself and ask. Question from Sandeep Subramanya. Can the invoice for a stage be raised in 30 days from the date of the stage work being done? Yes. So whatever is the event date that triggers, so that is the from that date 30 days you can have it for raising the invoice.
Venu, I think let Ashika check it again. No, in a continuous supply, the 30 days time limit, I don't think will be coming. Ashika, can you please check it out? The provision once again. 31, section 31.
31.5.
Yeah. Anyway, next question will somebody has raised a hand. Let Shankar Velumuri.
Hello.
Yes, please tell us.
Good evening, Mr. Venugopal. It's a very great session. Thank you for this opportunity to us. I have a small question. See, one customer purchased an 3 BHK flat in last year. After this COVID, it comes under 5% GST. After the second wave, he converted flat into 2 BHK. It is affordable. It comes under 1%. He paid majority 50% of payment in the first year. How we can adjust this into 1%? Is it eligible?
So what is the date of booking of the flat, sir?
So date of booking of the flat is 2020 April.
And at that time, was it not affordable? So the price was it reduced later?
No. Price is the same. At the date, the 3 BHK flat, it is above 90 square meters of carpet area. It comes under 5%.
Got it.
Now this is 2 BHK. It comes under below 90 square meters and below 45 lakh.
Okay. So
He is paid on.
Yeah. So the original booking has been cancelled.
Yes.
So you have to raise a credit note for the original booking, and this is a fresh booking. You have to raise an invoice for the fresh booking. So that is what I have said, that most builders do a net adjustment. Technically, the right way of doing it is, since the original booking is cancelled, raise a credit note for the full of the original booking and raise an invoice fresh for the new booking.
Okay, we are cancelled, registered that flat and sale agreement, but you cancelled that agreement and re-agreement also done. But we didn't transfer the money to him. Is it any need of transfer of money and we need to take back?
Sir, there cannot be unjust enrichment. So this is one thing which I would very clear.
Now pass JV. Pass.
Yes,
no. His thing is, I did not make a payment. So my suggestion is, please make a journal entry of having paid back and again recreated back into new flat account.
Yeah.
Okay. Good. Sir, one more question. Can I?
Yes, sir.
You are explaining something. I sorry, I intervened about that. You continue, you are explaining something about further to his question.
I forgot. It's okay. Maybe we'll take it. Yes, sir.
If you have any further doubt, I will call you, sir. No issue.
Okay.
One more question. Sir, our 5 blocks project, single approved plan. If I take NOC for single block, a partial NOC, but amenities are not completed. After the first block NOC, if I sold to any other person, any new customer after NOC, but the common area and amenities is not completed, whether it is GST free sale or any charges for amenities, because it is under construction amenities block.
Yeah, so this is again a litigated areas, litigated aspects. See, there are real estate is definitely not crystal clear. Whenever in a project where you have multiple towers and you are
Yes.
doing a tower wise construction, but for the purpose of RERA, you have obtained a single RERA number. So the
Yes.
project would be treated as all as one project. Now, tower 1 is completed, tower 2, 3 is happening. The common amenities pertaining to tower 1 or the say clubhouse either partially done, fully done, whatever be the activity. There are tenants already living in the tower 1, maybe at least 70% is occupied, 30% is still pending to be occupied. Now, can we treat this as completed project and pay only GST on the collect GST on the 70% and not on the 30%? In my view, again, I am looking, though there is no straight answer to it. The way I would look at it, since it is a single RERA number, I would look at everything as a single project. Liability on the developer is on all the constructed units, whether or not it is sold, because by virtue of development right on the date of OC, unsold units also have to be discharged GST.
Yes, yes, it's my own property. It is my own property.
Exactly. Hence, I would my view would be till the OC is obtained for the whole of the project, GST has to be levied and collected for all the units. Rajesh sir, what do you feel?
No, I think Venu, we had this discussion very detailed in one first session of this thing, where I specifically brought
till, it will be there till the end.
Yeah, no, I brought out the point, single project, RERA project, but having a multiple completion certificates possible. If the authority
they are all partial OC, sir. The authorities are issuing as partial OC.
Yeah, partial OC for the project, but for the whatever the partial OC, out of that, I would rather not use the word OC. I would rather use the word completion certificate as per the relevant law of that particular jurisdictional land authorities. Wherever they use a completion certificate, I think in that block, if any sale is happening, then I think it will not be subject matter of a GST. It will be there is a CC is already given. But to my understanding, the CC may not be given unless the amenities are built in. If you are able to get it, then you can escape a tax liability on that. But however, you will not escape complete liability because you are supposed to pay on a RCM basis on the development rate if the project is after April 19. So effectively, you will pay tax on even unsold flats also. Isn't it, Venu?
Yes, sir.
Yeah.
Yeah. Rajesh sir, you're correct. For the Sandeep Subramanian sir, for the invoice which is on the stage, the 30 days will not be applicable. As Ashika pointed here, it is on or before the date of completion. Shankar sir, is your question answered? Anything else?
I want further clarification. I will call you personally.
Sir.
Tomorrow, sir.
Right.
I have a number with Vinay.
Yes. Yes, yes. Then the question from Hanif, can we get input tax credit if I purchased a flat under old tax system at 12%? I am also a registered dealer under construction activity. Hanif, the input tax credit would be available only if you are under construction services. But when you are buying a flat is being purchased on own account. So 17.5 clause C and D restricts in availing input tax credit on works contract for on own account.
Hello, Venu.
Yes, honey.
I am a proprietor concern.
Okay.
Even though?
Yes. What
Even
is
though
that you are doing with that?
I am also a registered builder registered under GST, but I am purchasing a flat from another builder.
Right.
But that builder is under old system, under 12%
I
system.
get the point.
Hmm,
So under 17.5, you have a restriction on input tax credit for works contract.
Okay.
Unless otherwise, you are further supplying works contract. So if you are also in the business, so you are buying it before completion, you are selling, because it has to continue as a works contract service. So you are undertaking only then you get an input tax credit. Otherwise, you will not get input tax.
So if I am purchasing it and semi-finished, if I sell it the same condition, can I get it?
See, you are not in the again, it is a litigative. There's a difference between works contract service and construction service.
I am not giving any service to the builder.
Sorry, you are just purchasing one flat and selling it to another person. That's your scenario.
Yes.
No,
You're
no,
basically trading, or what you are doing?
I am also a builder by nature. Okay.
Okay.
I am purchasing a flat from another project.
Huh.
That builder is under the old system, old tax
Okay.
system. So he raised invoice for 12% to me.
Okay, fine.
Can I get input for that?
Now the question is, as you purchase that under constructed flat, you are selling that under constructed flat to another person.
Not decided still.
So what you will do of that? That under means what's your purpose? For self-use or to sell further?
What is the tax implication? If I use self, what if I sell other?
Self-use,
Ashika, I'll answer
no
Anif.
ITC.
Ashika, I'll answer Anif's question.
Okay.
Okay. Anif, namaste. How are you?
Fine, Rajesh. How are you?
Okay. Fine. No, Anif, here, firstly, what you are selling, purchasing and selling, technically cannot happen because you cannot sell what you do not own. Okay. It is not a goods. It is a transaction in an immovable property. The sale can happen only by the owners of the immovable property. You can, as Venu was explaining, you can only assign that particular agreement to the other person. You cannot act as a the project developer or a promoter sort of a thing. So this provision of taking ITC may not be applicable for you, and also you will not be a works contractor. You are merely a assigner, so ITC will be restricted. So better you will be liable to pay 18% on assignment fee, whatever you may be getting, because you will be only assigning an agreement. Effectively, the transfer of title to that property would go by the original owner to the ultimate buyer only. This is what is a point which you need to consider. Therefore, the proposition which you are telling may not be technically possible. Venu, was my thing correct? You want to add anything? You can add.
No, perfect. I concur with your view and very much right.
Can't I consider as a buyer?
If you are buyer, up to buyer is fine, but you cannot be called a seller.
Venu sir, one query from my side. Tabassum here.
Yes, madam.
When we go for a new project registration under GST, now, do we have an option to opt for 12% regime with input tax credit, or we are compulsorily have to go with 5% only?
Is it a commercial project or residential project, madam?
Residential.
Yeah, residential, you have to necessarily be under 5% if it is other than affordable, 1% if it is affordable.
In other words,
I
no
don't
option.
get the ITC benefit at all.
No,
You have no option. You have no option at all.
Yeah.
Thank you. Thank you.
There's one question from Madhu Malati madam, asking whether unsold flats after receiving occupancy certificate under JDA do we need to pay tax? The answer is yes. So, madam, the GST post 1st April 2019, there have been new phases or the new terminologies that have come. Construction service, development rate, everything has to be paid. A simple understanding, if I have to say, whatever the units built by the developer, if he is building 100 units, whether sold, unsold, all 100 units, he will have liability with a different name. Right answer to your question? Yes, GST is payable for unsold flats on receiving occupancy certificate.
Kirtana.
Any other question?
Sir, actually, hello.
Yes, madam. Madam, you are on mute. Madam, you have to unmute.
Tax, everything, one bit.
Venu.
Hello, can you hear me, sir?
Madam, excuse me. Venu, the clarification what you gave, there's some change, some modification to that. If it even in a JDA, whatever is sold by the developer to the ultimate customer or by the landowner to the ultimate customer would not suffer GST. Okay. I repeat.
So there is in a different form you will be paying. So when you are selling to the customer,
the flats which is unsold on the in JDA also, whatever the flats sold after completion certificate from the developer to the ultimate buyer, no GST. Whatever flats sold by the landowner after JDA, there is no liability. However, the flats given by the developer to the landowner either before completion certificate or after completion certificate, GST is payable. 1. 2. All the unsold flat of the developer, okay, on the date of CC, he is liable to pay tax on the same as a RCM on the transfer of development rate. So effectively, the character changes as RCM, but you will compute a tax and pay on the date of CC, though you don't pay as and when sold subsequently. So effectively, entire flats will suffer tax.
In different names.
Okay.
In different names and forms.
Okay,
That's
sir.
what
But
Venu was saying.
another CA told me actually before 1/4/2019, whatever JD happened, sir, between us. So before 1/4/2019, whatever JD happened, for that unsold flat, we don't want to pay like that.
Correct. What he said is correct. Whatever we told is JDA entered after April 2019. Whatever we said. In case JDA is before 1/4/2019, we are not liable to pay an RCM basis, but landowner is liable to pay an RCM basis if it is post GST regime JDA.
Okay.
Correct.
Sir, one more. Yes, sir. Sir, one more thing. That landowner shares is there, no, sir. That flats also we have to pay.
Yes. All the flats which you do give to landowner, you have to pay GST on the same.
So what's the percentage, sir?
Venu, can you just clarify?
Yeah. See, madam, I'll put it this way. I have constructed 100 units as a developer. 40 units I gave to the landowner. Even on 40 units, I did not get a single rupee. But my consideration is that 60% of my units, the UDS which I'm selling to the end customer, is like a revenue. So the 40 units at the JD date, whatever is the value of those units. So I have to derive the value of those units, take 1/3 deduction towards land. So liability is only for the construction services. 2/3 is treated as construction services. Again, at that 5% or 1%, I will be paying taxes. So the liability of the developer is all on 100 units in a different forms. So on landowner units as a construction services, sold to the customers before OC, again, works contract services, 5% or 1%.
Yes, sir.
Unsold as on the date of OC in the form of development rights. So the rate of tax is same, method of computation is same.
Oh, okay, sir. Okay.
I think all this we had explained of one of our first sessions itself, but
Yeah,
again,
we will,
as
I think we
Venu
will
said,
take up one session again only on the
again
base.
on this.
Yeah.
Yeah, because that will be important. I think Venu, these
Correct.
questions will be coming up often.
Yeah.
I think if none of the other questions, I think we can close now.
We can conclude.
Whether GST is applicable for landowners flat, answer it already.
Shweta madam, over to you. We have taken little more time.
Okay, sir. No problem, sir. And seriously, it was a very, valuable things which you have told. So
Sir, one
thank you.
question can I add? Devraj here. One question.
Yes, yes, sir.
Sir, this is regarding projects after April 19. Say 100 flats is the total projects what we are having. So we are able to sell 50 flats before OC. So it is under 5%. So what will happen to the balance 50 flats? So we are supposed to pay as RCM what you said now?
Yes.
So we have to pay as RCM and then collect back from the customer after we sell.
No, that is you are going to include it in your costing. That's all. Not separately.
That is what Rajesh sir mentioned. Is the units sold after OC?
Okay.
Do not suffer GST. You cannot collect in the name of tax when you are not paying it to the government. You cannot have unjust enrichment.
Okay, okay.
So this will get loaded to the cost of the unit. So inclusive of the GST and everything you are selling. Maybe earlier you are selling at 100 rupees plus 5. Now you are selling it at 105.
Okay, okay. So on the date of OC, I have to discharge the entire liability for the entire project.
And you cannot collect it from customers.
Okay. So that will be for 50 flats which is unsold.
Correct.
On the flats which is sold, that still I can pay on the date of as per the agreement or as per receipts, whatever it comes.
Earlier of it. Earlier of it. Even if the customers have not paid on the OC date and completion date, as per your terms of contract, they are supposed to pay full, you still have to pay.
Oh, we have to completely discharge.
Yes, because your inability to not to collect doesn't result. It is provisional service. Your job is to provide the apartment, you have provided.
Okay.
Or the receipt. If he has paid in advance, you have to pay in advance. So as on the OC date, entire liability will get discharged.
Okay, okay, okay.
Provided, Mr. Devraj, Mr. Devraj, your agreement says some amount to be paid at the time of registration. To that extent of the amount to be paid at the time of registration or handing over, if that clause is there, that's what I was mentioning about the terms of your agreement becomes critical.
Very important.
So,
yes. Okay, sir. Thank you, sir. Thank you.
So, okay. So it was very interactive session, and I hope that our participants have gained enough knowledge on, the GST for real estate. Thank you, Venugopal sir. Thank you, Ashika ma'am. Thank you, Rajesh sir, to contribute their valuable time and experts' opinion on GST for real estate. At last, I would like to tell you about that our next live session is going to happen on 16th of December, and we will share with you all the details of our session. And thank you all, and have a great evening.
Thank you.
Thank you. Thank you very much.
thank you.